When we first started trading Forex, we were always told to look for higher highs, higher lows, lower highs, lower lows. We're looking for trend. But what happens when the market has lower highs and higher lows at the same time? That's like mind-blowing. How can this happen? Well, I'm going to show you how to trade a triangle pattern in today's video and how to make maximum profits every time you see this very common Forex pattern hit the markets.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
All right, guys, so we're going to jump into it. Triangle patterns happen all the time in the market. We just recently had one, and I want to show it to you and how we traded it. And I want to basically give you a breakdown of how you would approach this because it happens all the time. Triangle patterns are very common, and they can be highly profitable if we approach them right. So let's jump into it. Before we do, if this video is going to bring you value, and you've been getting a lot of value from the channel, you guys probably can see I've been really working hard for you guys, trying to bring more and more value, trying to give you short videos, long videos, and everything to give you a complete Forex education. Because right here on Trading Get Paid, it's education over entertainment. So let's go and trade and get paid. Let's jump into it. So the first thing we have to understand, like very simply put, is when you see that you have higher lows and lower highs, you're going to find that you're having a pattern form. In its basic form, we can basically call this a range, right? It's where it's moving sideways. We don't have a trending market. We have a sideways market. However, there is a difference between a range and a consolidation, and you should watch the video above to see a more in-depth breakdown of the difference between a range and a consolidation. But for today's video, and for the purpose of it, let's just talk about it being a range. So a range is sideways movement. A consolidation is when you have sideways movement that is getting smaller as the sideways movement continues. So today, I said range a few seconds ago, I meant consolidation. So this is a consolidation when you see higher lows and lower highs at the same time. Now, let's kind of go and break that down a little bit further here, and I'm going to show you how to actually trade when you see this stuff happen. So first thing you have to understand, if just because something is consolidating does not mean it's a triangle pattern. So anything can range. If you're looking at like the 1 minute chart and you're seeing, price range on the 1 minute chart, you're not looking really at a triangle pattern. Triangle patterns are more for higher time frames, 30 minute and above, really 1 hour, 4 hour, daily, weekly, etc. And so you're looking for triangles that are going to form on the higher time frame, showing you market direction. Okay, now that's the first thing. The second thing is when you do see what we would call like a triangle pattern on the higher time frame, when you see that come down on like the shorter time frame, where it's something that maybe only lasts a few hours or maybe even a day, many times we call those pennants. Okay, so what will happen is on the higher time frame, let me grab this writing tool. On the higher time frame, we would call it a triangle, but on the lower time frames, or if it doesn't last as long, maybe it kind of happens quicker. Maybe the wide parts are not quite as wide. So, and we'll get into that in a minute. But when you have something that's wide like this, you're gonna find that you're gonna have a triangle pattern that lasts maybe a couple weeks or whatever it might be. when you have it that happens a lot quicker, and you know it's happening quicker like that, you're not really calling it a triangle, we call it a pennant. Okay, and there is a slight difference, but for the purpose of this video, I'm just going to show you how to trade it as a triangle pattern, and you can take the same approach when you see it on a smaller time frame or a shorter pattern when it's a pennant. Okay, so the first thing we have to do is we have to first identify where we're coming from. So right now, when you look at it, it kind of looks like it's coming from the bearish perspective. But when you trade a triangle, especially one that lasts for a while, when you see here at the top, look at the date at the top of that when it forms. You're looking at May 17th. And then over here, you're looking at May 25th. So you're talking about something that's been going on 8 whole days. Okay. Now I know I'm kind of going back a little bit in the market, but I'm just kind of showing you this because I wanted to show you a full breakdown on the 4-hour chart. So if you look at the date, this happened over the course of 8 days. Okay. And so you have a weekend in there. So you're looking at, you know, essentially 6 whole trading days, and we haven't broke out yet. So that's a triangle. And when you have something that lasts so long, a whole trading week, a full weekly candle like that, when we see that, we want to see more than just what's recent. We want to see the whole picture of where the market's been. So it's very simple. We just come and we zoom out a little bit. And when we zoom out, we can clearly see that we're bullish. Even though that this last move is bearish, overall we're bullish. So when we see that, we would understand when we look at the whole thing together, we're bullish, very bullish. And we have this pullback that is bearish, but it did not change the trend of the market. And so we would expect from this triangle for it to be a bullish breakout. A triangle pattern is not definitively a continuation pattern, but it is, however, a continuation pattern based on the overall trend. So when you see it coming down from a bearish like this, you can see a bearish breakout. However, when you see that the overall trend is bullish, we would expect a bullish breakout, even though the most recent move is bearish. So I hope that makes sense. If you have more questions about that, comment below and I'll help you explain, I'll help explain those in the comments. So the next thing to do is when you see these patterns form, once you identify them, first of all, let me say, how do you identify it? Well, the first thing is that we have to have at least two moves on the top and at least 2 moves on the bottom. Okay, so you have to have at least 4 points or 4 touching points to declare that something is a triangle. So what those 2 points need to be is you need to have a starting point, you need to have a low. So now you have a high and a low. Let's not even think about all this for a second. We'll come back to that in a minute. But you have a high and a low, and then you identify that you have a lower high. So from the top side, you have a lower high, but on the bottom side, you have a higher low. So when you have a lower high and a higher low, now you can start to identify this as a triangle. All right. So the next thing we would do, if you just go right into your trading view and use your triangle tool at the top, I have it in my tray. If not, you can look at it in your side menu in your toolbar. Grab the triangle tool, and just like a trend line or an ABCD tool, you're going to go from A, B, C, D. Okay, and so you're going to go and let me make that a little tighter for you. So you're going to go and you're going to get a nice triangle here. Now, once you have those 4 points, the rest of it, like it's predictive. So you say, well, how do I know if it's a triangle if we don't really have all of it yet? Well, once you have those 4 points and you can draw that tool on there, well, thank God for good tools, right? So this will now tell you where your apex is. All of this is based on trajectory. So what do I mean? I mean that if this line were to continue down and this line were to continue up, the apex would happen right here. From the beginning, right here, you would have percentages, 20%, 50%, 75%, like that, right? And at some point, these lines would cross. If price was to continue staying inside of there, at some point, it would come to an apex where it would have to go one way or the other. It would have no choice but to break because the lines cross. Okay? So it's very helpful to have that, because now you have an apex, you have a limit, right? You've captured the candles inside of a small area and said at some point you have to give me a breakout. It forces the market to play to you instead of you playing to the market. Okay. The next thing we have to understand about a triangle is that now that we have the overall direction of the market and we have our 4 points, top and bottom, now that we have that, the next thing to do is to understand that when you have a triangle pattern, the breakout has to occur somewhere between a halfway point, and the breakout has to happen before the apex. You do not want to go all the way to the apex, okay? If you get all the way to the apex, what will generally happen is you'll have a weak move because you won't have volume. There's not enough room at the apex for volume candles to form without breakout. So why is that important? Because imagine if we were to get a big, like let's just say this size candle, which really isn't all that big, but if you look at that same candle, that would happen down here, right? Well, by the time you have any structure, number one, you don't really give yourself any room for movement. And number two, there's no volume in the market. So now you're kind of waiting, and you're going to end up with a move, but you're going to end up eating a lot of drawdown. So what you really want is you want price to break out prior to getting to the apex. We really like between 50 and 75%, okay, of the market or of the pattern. So once price gets beyond like halfway of the triangle, and before it's like at 75 to 80% of the triangle, now we should be looking for a breakout. Now, it is not definitive that it'll always break out bullish. Sometimes we will get a pattern that breaks out the wrong way. And sometimes we'll get false breakouts or fake outs. That happens, and we've talked about that in many videos. In fact, you can go back, and I did a short just a couple weeks ago, or a couple days ago even, that talked about what to do when a pattern rejects. And you can watch that above. So the next thing to do is to look at the fact that we want price to break out in between the 50 and the 75 degree mark, or the percentage mark of the trade. So now what we'd be looking for is an opportunity for a breakout, okay? And once that breakout occurs, we would be looking to enter the market. So first things first, there are a couple of different ways you can trade a triangle. One of them is more for day traders and maybe for the lower time frames, and for those who don't want to leave their money in the market long term. It's also good as a take profit one for those who want to be swing traders and actually leave their market or their money in the market a while. So the first thing we would do is anytime you see a pattern at its widest points or at its beginning point at A, you can literally just drop a line on A right there. And when the pattern breaks out, once you get a complete breakout of the pattern, you can trade to A and you're out. That's it. Just that simple. So let's see what would happen if we did that. All right, you can see there that price gave us a breakout. It didn't have a ton of volume, so we did get a little bit of a pullback right here, and then price took off. So at that point, what we would have seen is price that broke out and gave us about 145 pips on the 4-hour chart. Now that sounds like a lot of pips. Now here's the cool thing about it. Let's go back and let's grab this, And let's see, we got a breakout right there. It was at this candle right here. So let me just drop that on there for you. We got a breakout. Our stop loss would have been back here, or if you are a little bit more aggressive, you could use previous structure back here. And so your stop loss would be here, your target would be here, and you were just over 1 to 1, like 1 to 1.4. And, you know, look, I personally don't do 1 to 1.4, but some people do. I see people doing all the time 1 to 1 trades. That's up to you. I'll leave risk for reward for another video, and I'll let you kind of determine what you want to do there. The second thing we would do, and the more enticing thing, is that we would like to trade a little bit longer, a little bit bigger. Okay, so another way to do that is there's this tool called the info line that nobody really uses. And what it does is when you drop it, it shows you from A to B, from beginning to end, it shows you a lot of percentage. Number one, how many bars from beginning to end, how much time, how much distance, how many pips is the trajectory, and then even, and what's most important, is the degree of the trajectory. So what I want to do is I want to grab that tool and I want to drop it on A, okay? And I just want to follow this triangle, okay? I just want to follow this triangle. So if I do that and I drop it on this triangle, okay, just like that, you can see here that I'm at 16 degrees. 16 degrees. So here's what you do. You take that line and you run it 16 degrees. That's it. If it's 16 degrees, it's 16 degrees. And there you are. So you have 16 degrees and you have, it matches your downward trend line. So now here's what happens. Now that you have that, you don't really want all this information in front. You can replace it with a trend line, or you can make that transparent. It's up to you. Put a trend line on there, and there you go, right? So now you can just take that out, and there you go. So here's what you do. Once you have that breakout, the same way, you got take profit 1 at the beginning of the pattern, but then once you do that, maybe you take 50% of your trade out. Maybe you start scaling out. But you can literally use this now as your take profit. Your take profit now becomes this apex line, or this trend line that runs parallel to your triangle. So watch this. Let's see what happens. As you can see, price ran all the way up after going to our take profit 1. Let's put that line back on there. We got our take profit 1. It got it. It pulled back and then broke through it. There we go. We're going to continue on. And now you ended up running, instead of 100 pips, you ended up running all the way up to 387 pips just off of that. And now suddenly, when you look at it from a perspective of the whole position, the whole trade, and you do it that way, now when you look at your risk, up to the apex of the trend line, I keep saying apex because I'm thinking of this down here. When you look at the parallel trend line, now suddenly you have almost a 1 to 3 risk reward. Now, how do you know where on that trend line that you're going to take the trade to? Well, you just look left at structure. And so when you look left at structure, you would just do this. You would come back here. You would come back to that structure right in here. We don't do lines, we do zones. So you'd come back here just like this. And now you have a target. So you would look at this trend line. You would look at that, level right there. And you would say to yourself, when price breaks through that zone, I get out. So what if you just brought it to the bottom of that zone? You're still at 350 pips. Even if you didn't get all the way up to the top, you're still at 355 pips, and you're still at a 2.6 risk to reward. What a beautiful setup based on a triangle pattern, based on a parallel trend line, and based on low risk, high reward setup. So guys, that's what we really want to look for. When we see a triangle pattern set up, just to recap the steps. Number one, which direction was it coming from? Number two, do we have 2 points of contact on each side? 2 and 2, 4 points total. Do we have a breakout in between 50 and 80%, 75 to 80% of the total pattern? Do we have a structure that pushes us up? Widest part becomes take profit 1 on a swing trade or a day trade target. Risk reward is intact. Parallel trend line at the same degree that the pattern goes down, you run it up. Use structure from the left as a confluence or convergence point. Put your target at the lowest line of that convergence. Take the trade with good risk to reward. Scale out all the way out. Guys, that is how you profitably trade a triangle. So next time you see one of these patterns forming, I want you to come back to this video, get the steps down, write them out, because these happen all the time. And next time you're going to be able to catch pips because you were able to identify a triangle pattern, or in a smaller time frame, a pennant. So I hope this brought you a lot of value, guys. Like, comment, subscribe, share the video with your friends, share it on your social. Help me to bring this channel. We're almost at 60,000 subs. I'd love to get to 60,000 subs very soon, and with your help, I know we can do it. So guys, share it. If you're ready to become a student, I have all kinds of amazing content. Our students are winning our trades. We've only lost 1 trade setup for the entire year so far. 3 weeks in, we've only lost 1 trade. We're like 23 or 24-1 for the year so far. And we have accumulated thousands of pips already. We've accumulated thousands of points on gold, and we're winning together. Become a student. Go to tradeandgetpaid.com. Go ahead and join us, and let's make some money together. Let's win and kill these markets together. Education over entertainment. Let's keep eating. I'll see you in the next video.